Hello, today is Friday. It is Friday, December 4th. Another good week so far. It is 3:12 p.m., so not quite the close. I'm not expecting, I shouldn't say that. I'm not assuming a great close or a bad close. I am just showing you where we stand right now. I will tell you my opinions. Again, none of this is advice for anyone. This is mainly for clients so they understand my thought process and what I'm thinking and why I'm thinking that. As you all know, or if you don't know, the biggest thing about investing is risk to reward. And so I look at a lot of indicators to say, how much should we have invested right now based on where we stand? Again, nobody has a crystal ball. The reality is this. We've had a very fast move up since November. It's been great price action. I'm seeing no sell signal in the price action. So from that standpoint, it's very bullish, okay? So, every slight dip, even yesterday on bad Pfizer news, it was bought within 10 minutes and back to all-time highs, okay? So, and another thing that is very encouraging is the rotations between small caps and growth, or value and growth. Value for most of the week was actually negative and then came back through the middle of the week. And so if you look at this, for example, small caps right here, this is the week. Today itself, okay, is up 2.6%. The point being is a lot of the rotation back and forth, the NASDAQ was actually doing quite well for most this week. And as you can see, actually led this week. It is lagging today, but they keep rotating back and forth. And this is how bull markets continue. So from price action standpoint, it is very good. Can't deny that. So there's the positive end is, hey, price action is good. The thing that has me keeping some in the game, right now, we only have 40% invested. And every day, like I said last week, every day we go up, I'm going to slightly trim some. I have not trimmed any today. Not sure I want to yet because price action has been so orderly. Now, we've got to be real about this. You have got to expect that at some point, we're going to see a 3 to 5% dip. Okay, we've got to be real about that, but we're in good position for that. Okay, so I have 60% in cash ready to buy that dip. So if the market goes down 10% hypothetically, or the S&P 500 goes down 10%, ideally we only go down 5%. Okay, so I'm being realistic about this move, and I'll show you what I'm seeing that, despite price action, I'm going to be disciplined and take some gains. The thing that has me in the game still is if we get stimulus, and they're actually kind of alluding to that we might get this pretty soon here, which is, in my opinion, keeping the market going a little bit longer than expected. This might give small caps an even bigger boost. So given the risk reward, I have 40% invested, saying with 40%, I want to see some upside. Now, am I probably going to give up some upside? Yes. So again, it comes down to the question of this. Do I think the next 5% is up or down? I think potentially the upside could be 2 to 3% short term. I want to make this very clear. I think 2021 is going to be a great year. The setup is fantastic. We get through COVID, get stimulus money. The backdrop is fantastic. So don't just think because things are high in price or some indexes are high in price or indexes are at all-time highs that it can't go higher. It can definitely go higher. We've been in a 3-year consolidation. This can go higher, okay? So this is all very short term that I'm backing off risk. I expect a small dip. And right now, every dip is being bought. So I need to keep 40% on in case we do go higher. And we very well could. And I'm okay to give up some of that because historically, we're at some historical sentiment levels where it's like, hey, there's a lot of complacency. Just be really cautious here. And we've got to be realistic. Case count is increasing, but what's keeping everybody in the game is stimulus and vaccine. So at some point, the bad news that we've been seeing it from an economic standpoint will probably play catch up. Like The payroll number was not good at all today. The market shook it off, basically saying this probably means we get stimulus faster. That's the kind of environment we're in, where you got to be careful and got to be realistic. So again, there's my rhetoric for why I'm doing what I'm doing. We have 60% in cash. Again, what that means is it's sitting there ready to buy on dips. So again, the risk reward I don't think is great to the upside short term. Again, short term. It very well could be in the next 2 weeks we see a quick little 3% dip, and I'll have to start adding, okay? But there are opportunities, and that's what you have to understand is a lot of these are just indexes, and there are names outside of the indexes or just individual names in general that actually are setting up very well. So let's go over some charts that I'm seeing. Kind of jokingly here, the 12 Days of Christmas song, talking about a Santa Claus rally here. We now have 8 gaps up, meaning overnight the move was a gap up. So it gapped up. It could have been big or small, but most of them have been pretty substantial upticks overnight. This shows 3 of them, and there's definitely 5 more in here overnight. The saying is generally, usually those get tested. Now, I don't think we go all the way to 20 or 32, 33, but it would not surprise me to test the 20-day moving average. That would be healthy, and it's really not that big of a move, okay? So price action continues to be good. It is holding the 10-day moving average. I mean, this is textbook. It would not surprise me to eventually test 67.60. It would not surprise me if 67.70 does not hold, that we go lower pretty quick. So in short, I don't expect anything drastic. If it does, I'll react. But we have 60% in cash. So you got to understand, it's probably going to see, if the market goes down 2%, we go down around 1%. So I feel like we're in a good position for this dip. So be mindful of that don't be too concerned about if it dips. In fact, you should hope it does dip for our situation, because we are getting a little overbought. Another indicator, the 8-day and the 21-day moving average, everything looking pretty good there. The put call ratio, this is something to be very aware of. It's not an immediate sell signal, but it is it's basically indicating that the market is pretty complacent at this point, okay? When the put call ratio gets to 35 or below 45, it's kind of like, hey, the risk reward is not great here. Hence why the last few days into strength, I am selling, okay? I know that I'm going to not be able to keep pace with the indexes this week, or, for the past couple weeks, I have not, because I've been trimming, but it usually is offset by what I will gain or protect over the next couple weeks. So again, put call ratio. This kind of just shows you, I'm showing you price action, what a lot of people don't understand. Everybody hates this kind of price action. This is what we saw in September and October up to November of the election. Big decline of 14.3%. This is the NASDAQ. So the QQQ, the NASDAQ 100. Nice move up. You think you're out of it. Nope. 10% down move. You get in, top it again. Go down about half. This sideways movement, even though it's painful, usually leads to good things. We're finally breaking out. Not a bad thing. If you're asking my opinion on whether I think that the NASDAQ can continue to do well after some probably a needed dip, the answer is I do think it does continue. In fact, a lot of these names are consolidating quite well. So again, most of these indexes are getting to a relative strength index, or an RSI, near 70. Near 70 is kind of another warning sign. Not an immediate. We've seen that this can get above 70. Okay, same thing with the S&P. It's right around that level. Interestingly enough, IWM, or the small caps, is actually the most overpriced. Something that I'm keeping an eye on, and this is a common trend, is the 10-year Treasury yield going up into the election, going up into the end of the year. Not a bad thing for financials. So got to keep that in mind. And that definitely does not hurt the small caps. a positive, but also like, hey, we're running a little hot indicator is percentage of stocks above their 200-day moving average. We're at 90, almost 92% as of Thursday. Okay. And you've seen every time we've gotten near there, it usually leads to a pullback. But understand that this is very good to see. This can remain that way for quite some time. This is also another concerning sentiment thing where active asset managers have, as of currently, 103%, so over 100% invested. So they're basically on margin. That is got to be careful. And so that's why I have as much cash as I do, because the risk reward is not great. Does not mean it's not going higher short term. I want to make that very clear, which is I have 40%. That is why I have 40% invested. McClellan Index, basically advancing issues, less declining issues. This is not bad at all. We've talked about this several times. Hey, if this holds, this could lead to good things. And it's tested nearly twice and held. So that's very good price action. Again, the price action is not the problem. The problem is, are we up too much too fast? You're not going to time it perfectly, which is why I continue to trim slowly. The correlation between small caps and the S&P 500. This broke out and is not let up. Don't be surprised if midterm or long term that this could continue. Okay? Now, would it shock me if this goes back and tests eventually here? Probably not, to be honest with you. But if that happens, it'll probably be bought. Okay? Volatility, the VIX. Gotta be real about this. It is going in the right direction. So the fear index is decreasing, which is good. So we've talked about this previously. A hockey stick, boom, move up. Hockey stick, boom, move up. This is starting to curl a little bit and gets to a range on the RSI where it usually does pop. I don't think it lasts long because I think the market is extremely bullish and for good reason. But it would not be uncommon to see a little pop in the VIX scare the crap out of people and have it bought again. We need a breather. Again, if I'm showing the S&P 500 short term, look, we are at 67%. So it can continue. We've gotten well above 70 before. Okay, so we got to be real about that. So it can continue. Price action is not suggesting a sell signal right now. If this goes below 36.70, that's a sell. Not a sell, but it's a caution sign. Maybe reduce. If this goes below 35.80, that's probably an out. Okay? So overall, price action is good. But I want you not to fear where we're at because we're in great position if this goes down. Again, if the market goes down hypothetically 10%, we should only go down about 5% based on how I'm allocated. Now, I want to show you to say, hey, there's a lot of things overpriced, but there are companies out there that don't look bad from a risk reward standpoint, like in Apple. Guys, this is well off the highs. And again, this was pretty extreme because it basically was a stock split. So it is what it is. In short, though, this is not bad risk reward. So if some of these names get going again and give small caps a breather, this can continue. Like, look at this. Like, even Adobe, well off the highs, a great long-term name. Doesn't mean it's going to continue that way, but it's at a good risk reward level. In addition, again, I'm showing you big names purposely. Like, I'm not going to show the general public every name that I'm looking at. A Salesforce. They recently talked about the sale about Work or Slack. This is a good name, okay? And it gapped up, went sideways. I think that this is pretty extreme. It might need some time to work off, but it did all very close to filling that gap, and wouldn't be surprised if this has some upside potential, even if the market doesn't necessarily do great. Okay? So there are names like even a Visa. I mean, there are problems there. Don't get me wrong. Where are you at? There you are. Where this is consolidating sideways. That's bull flagging. This looks pretty good long term. It might need some time. Might need to test a 20-day moving average, but not bad price action. One more for you. Let's see. What do I want to show you here? Baba should be in here. There we go. So another name, the reason why it's not doing great is there's a lot of risk because it's international, and with Trump, there's still some issues internationally there. If Biden reduces restrictions there, this could fly. I mean, this is down a lot. Okay, so the point being is the market is still providing good setups. Okay, so don't just assume because a lot of areas are overbought that there are not opportunities. I'll leave it at that. Have a great weekend. Remain calm because, and again, if you're a client of mine, I've tried to preach this to you. Hope for dips, because every time we get to near overbought levels, I'm going to sell based on discipline. Okay, so hope it goes down. Be thankful that we can get in at lower prices. Thanks, guys. Have a great weekend. Get some rest. These are crazy times with COVID. Get outside, even if it's ugly. Love you all. See ya.